Hi everybody, Jeff Yasteen here. Make sure to subscribe to us here on our YouTube channel. Follow me on Facebook and on YouTube, and make sure to leave some comments below. I'd love to hear what you have to think. So let's talk about Christmas shopping. Now I know right now it is a little bit early to be talking about that, perhaps, but it's never too early to think about that sort of thing when it comes to stocks and the stock market. And thinking out ahead to what the end of the year is going to be like, I think there are at least a handful of different kinds of plays that we can make here for stocks that should do well as we head into the last phase of the year and on into the into 2021 as well, and that are doing well despite the headwinds that we're looking at regarding the pandemic and the economy. So one stock I want to point out to you here that I really like the look of is a stock called Zumiez, symbol ZUMZ. So I see Zumiez as a high probability breakout trade as we head into the holidays and into 2021. Zumiez is a surfwear retailer. It has more than 700 bricks and mortar locations, but also very importantly, it has a strong e-commerce business as well. So as you can see on this chart here, they post consistent growing profits. In 2010, Zumiez had annual profits of 38 cents a share. In 2019, that had risen to $1.79 a share. That's really, really good considering the past decade is marked by, the stories about dying malls and high-profile bankruptcies. And yet Zumiez has found the right kind of formula to be able to make its business model work and work very well. That's very, very important because, and you'll find that quite often amidst a sector that is out of favor, there's always a handful of companies that somehow are able to make it work. And quite often it's because they have great management, they may have a great founder who is still very much involved with the company and building the company from its entrepreneurial origins to to a much larger firm. And so those kinds of folks always have a good eye on the bottom line and making sure they deliver, let's call it maximum efficiency to shareholders. So they always want to make sure they're generating profits, and they'll do what they have to make sure that that is the case. And with that in mind, and relative to the profits that Zumiez now earns, the great thing is it's clear that investors are undervaluing the stock by a wide margin, in my opinion. As this chart shows, even though the retailer is growing its annual profits in excess of 30% a year, investors are still assigning a very low PE ratio of roughly a PE of 10, which implies a growth rate of 10% a year. So that is a great thing to note because for me, I love looking for companies in which investors appear to be underpricing growth. And you can see that quite often by looking at the charts like I was just showing you here, where you have a company where the profits are growing by 20 or 30% or more a year, and yet for one reason or another, there's a disconnect at the shareholder pricing level, and Wall Street, for one reason or another, is pricing the stock at something below that level. And so how many companies do you know that have quadrupled their yearly earnings per share as Zumiez has, yet the stock is even cheaper now than it was a decade ago? So these sorts of undervaluation notions usually don't last too long. And in this case, I think it's clear from Zumiez stock chart that that is what's basically beginning to change now. The stock, as you can see here, is closing in on an important breakout level and in the mid-30s range. Now, Wall Street analysts expect Zumiez to earn around $2.62 a share when it closes the books for this year. And if we multiply that number, 262, by an even modestly higher PE value of, say, 20, then we get a potential stock price of at least $52. And that would imply a gain of about 73% from the current price of the stock. And we should keep our eye on the approaching red trend line. That red trend line marks the top prices for this stock for Zumiez going all the way back to 2007. And as you can see, each time it approaches that red trend line, it gets turned back. Now, my bet here is that Zumiez stock has become so cheap relative to the profits the company earns and its rising profits that it's going to move up to that red line and then break through it. And one thing I can tell you is that for a great many stocks that have these very long, sort of narrow ranges that go on for a number of years, what happens sometimes is basically, for whatever reason, either Wall Street doesn't understand the company, doesn't understand the business model, and sometimes it's just sort of a maturation level. And you can see any number of different stocks. You can remember AutoZone back in the 90s. Great classic sort of cash-rich, high cash generation stock. And yet AutoZone went sideways for a number of years through the 90s before it finally broke through to the upside. Another one is Dollar Tree. Back in the 90s and in the early 2000s, dollar stores were kind of like, what the heck is that? Nobody really understood it, and it didn't really have that much of a following on Wall Street. And so stocks like Dollar Tree basically moved sideways in a wide range for years before finally breaking through to the upside. And you see this kind of thing also with tech stocks. There's one stock, a cloud computing stock, Ciena, which had built this long base that went back a number of years before it finally started breaking out roughly a year and a half ago or so to the upside. And so as these companies do this sort of thing, there's an old saying about the longer in place, the higher in space. That's like a trading term. And the basic idea here is that the longer a company builds out a narrow stock chart, narrow price range on a stock chart, when it finally breaks above that range, it often can go and go and go. So going back to Zumiez, I see that as a high probability breakout trade here. I see it as a stock that has obviously proven that it can do well despite the overall sort of negativity that we've seen in the retail sector. And this is one stock that has been proving the naysayers wrong. And another thing I want to point out here is that Zumiez has a very strong e-commerce system. In its most recent conference call, the surfwear retailer noted that sales on its e-commerce channel were up about 122% compared to year-ago levels. So this is a company that has sort of a stay-at-home, in my view, has a sort of stay-at-home mentality, being able to appeal to that through this sort of pandemic period. And yet it also is a company that can clearly make things work as we move beyond the pandemic. So for instance, for Zumiez, even though they are somewhat of a mall retailer, they have roughly 70 to 90% of their stores open right now, and they continue to maintain those open and open more as time goes by. And they're also actually still expanding the number of stores that they have in their store fleet as we move through this process. So these are all important things to note. It's great when you see a company that knows what it's doing, knows what its business model is, and is able to continue to perform through a very difficult period like this one, and is only just now, I think, starting to get recognition on Wall Street. And I expect the stock to continue to get that recognition. We should see that pay off in coming quarters with a much higher stock price from here. If you like what I'm talking about, again, make sure to subscribe, follow me on YouTube, follow me on Facebook, follow me on Twitter, and we'll talk again soon.